Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is July 21st, 2025, and we're diving into the latest earnings report from ServisFirst Bank Shares. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. I'm excited to discuss ServisFirst Bankshares' performance in the second quarter of 2025.
EP and Analyst Forecast. Let's start with the earnings per share. ServisFirst reported an adjusted EPS of $1.21, slightly above the forecast of $1.20 from two analysts. John, what does this tell us about the company's performance?
This is a positive indicator. The adjusted EPS not only beat the forecast, but also showed a significant 27% year-over-year growth. This suggests that ServisFirst is effectively managing its operations and capitalizing on market opportunities.
Revenue and profitability overview. Moving on to revenue and profitability, ServisFirst reported a net income of $61.4 million and a net interest margin of 3.10%. They also saw loan growth of $346 million. How do these figures reflect on their financial health?
The net interest margin improvement to 3.1% from 2.92% in the previous quarter is a strong indicator of profitability. The loan growth of $346 million, or 11% annualized, shows robust demand for their lending services. Additionally, the book value per share increased to $31.52, up 14% from last year, highlighting solid shareholder value creation.
Operational efficiencies and future outlook. ServisFirst liquidity remains strong at $1.7 billion, and their CET1 capital ratio increased to 11.38%. With a return on equity of 14.56%, what does this mean for their operational efficiency and future outlook?
The strong liquidity position and improved capital ratios indicate a well-capitalized bank, ready to withstand economic fluctuations. The return on equity of 14.56% is impressive, reflecting efficient use of shareholder funds. CEO Tom Broughton expressed satisfaction with the loan growth, which bodes well for future profitability.
Risks and strategic initiatives. Despite the positive results, there are some risks. Non-interest income decreased significantly, and the provision for loan losses increased to $11.4 million. How should investors interpret these figures?
The decrease in non-interest income, primarily due to a loss on the sale of securities, is a concern. However, the CFO, David Sparacio, mentioned that asset repricing could lead to higher net interest margins in the future. The increase in provisions reflects a cautious approach to potential credit risks, which is prudent given the current economic environment.
Key takeaways. In summary, ServisFirst Bankshares delivered a solid performance in Q2 2025, with an EPS beat, strong loan growth, and improved net interest margins. Their liquidity position remains robust, supporting future growth. John, any final thoughts on their investment prospects?
ServisFirst is well positioned for continued growth, with strong fundamentals and strategic initiatives in place. Investors should keep an eye on their ability to manage non-interest income and credit risks. Overall, it's a promising outlook.
Thank you, John, for your insights. And thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on ServisFirst performance in the comments below.